Hi everyone, Erica here with Paragon Accountants, and today we're going to talk about the Inflation Reduction Act and what's in it for you. So, believe it or not, it's already time to start gearing up for another tax season. As we wrap up the 2022 tax year, we thought it would be a good time to review the actions Congress and the IRS have taken in the last few months that may have an impact on your returns, refunds, and future tax planning. If you have any questions about these changes and how they could impact your return, or need advice on how you can reduce your tax bill for the rest of the year and get a start on planning for next tax season, please get in touch with us at Paragon Accountants. So let's begin on the Inflation Reduction Act tax credits. The tax legislation that has received the most attention in the past year is the Inflation Reduction Act of 2022, also known as the IRA of 2022, which was signed into law this August. One of its goals was to address climate change by offering tax incentives for going green. While some of these incentives are targeted at U.S. businesses, most are available to U.S. homeowners who make energy-saving improvements to their homes and vehicles. Many of the tax benefits offered by the IRA of 2022 are not new, but are actually extensions and modifications to existing credits that either had expired or were set to expire soon. For example, the non-business energy property tax credit was renamed to the Energy Efficient Home Improvement Credit and extended through 2032. Beginning in 2023, the credit amounts will be 30% of the cost of the eligible home improvements made during the tax year, with a $1,200 annual limit. The specific annual limits for improvements are $150 from home energy audits. This is something like hiring a professional to do some outside reviews of your windows, walls, doors, to spot any major issues causing leaks into or out of your home for energy efficiency. $250 for exterior doors meeting Energy Star requirements. $600 for windows and skylights, again, meeting Energy Star's most efficient certifications and requirements, and $2,000 for specified heat pumps, water heaters, and some stove and boilers too. $600 for other qualified energy property, including central air conditioning, electrical panels, and certain related equipment, water heaters and such. There's also an updated electric vehicle credit. Did I get your attention? It may seem that the IRA of 2022's $7,500 tax credit for purchases of new electric vehicles is just a continuation of a credit that was already available, but the legislation made some changes. The credit is now known as the Clean Vehicle Credit, and the IRA of 2022 placed several restrictions on the credits that may make it difficult for some buyers of electric vehicles to take advantage of it. So you want to pay attention. These changes are expected to have the broadest impact, including caps on the credit, a limit on the retail price of qualifying vehicles, and new sourcing requirements. So starting in 2023, only households with income up to $300,000 will qualify for this credit. It's a big change, but the credit limits to individuals with incomes below $150,000 if you're filing as a single filer. Additionally, only battery-powered cars priced at less than $55,000 are eligible, or $80,000 for vans and SUVs and trucks. This is also a big change. Finally, final assembly of the vehicle must have been in North America, and the materials from which it is constructed must meet specified sources of requirements as well. Next on this list for the IRA 2022 guidelines is student loan forgiveness. This is a big buzz right now, and it's not taxable federally. President Biden's decision to forgive a portion of some student loans and the objections some have raised to his actions received a great deal of media attention over the summer. Receiving significantly less attention were the potential tax implications for those who received this loan forgiveness. Many in the tax community were concerned that those who received forgiveness would end up paying a much larger tax bill because the IRS had traditionally taxed forgiveness of debt as income to the taxpayer. Fortunately for you, Congress Congress had already anticipated the problem, and the American Rescue Plan Act of 2021 preemptively excluded most student loan debt from income for the 2021 through 2025 tax years. Next, we've got educators' expense deduction. This is an increase for the upcoming tax year. The out-of-pocket expenses that educators can claim as a deduction increased from $300 for 2022 up to $50 from the last year. This is the first increase since 2002. The deduction for unreimbursed expenses is available for all educators, even those claiming the standard deduction. And married educators who are both claiming the deduction can now claim a deduction of up to $600. If you or your spouse are an educator who plans on claiming the deduction for 2022, remember that you need to track the receipts for your out-of-pocket expenses to verify the amounts you can claim. Next, we have improper forgiveness of the PPP loans for those self-employed or business owners. One of the primary benefits of the Paycheck Protection Program, also known as the PPP loans, was to help businesses keep their workforce employed during COVID-19 pandemic. This made many eligible borrowers qualify to have their loans forgiven, and the forgiveness is not taxed. However, there were some instances where borrowers had their loans forgiven despite not being eligible for the forgiveness. An IRS review of the program discovered that some ineligible taxpayers got their loans forgiven, often through misrepresentation or omissions. This fall, the IRS announced that those taxpayers whose loans had been improperly forgiven must include the forgiven amount in their taxable income. Next, new funds to improve IRS enforcement. The Treasury Secretary Janet Yellen recently outlined the IRS's plan for nearly $80 billion in additional funding in the IRA of 2022, which includes increasing the agency's compliance and enforcement efforts. While the additional funding will decrease the gap between what the U.S. taxpayer owes and actually pays, Yellen stressed that the new resources will not be used to increase the audit rates for households with less than $400,000 in annual income. In addition to increasing the enforcement, Yellen explained that the funds will be used to transform the IRS into a 21st century agency and improve customer service by fully staffing IRS tax assistance centers and hiring 5,000 additional phone representatives and improving the agency's slow turnaround for paper returns. That's something I'm excited about. Next, COVID-19 penalty relief for late filers. The COVID-19 pandemic made it difficult for some taxpayers to file their returns, and in September, the IRS announced it would stop imposing failure to file penalties on individuals and businesses that filed their 2019 and 2020 returns late. The deadline for taxpayers to file late returns for those years and have their full penalty forgiven has already passed, but the IRS says that taxpayers can still file and pay a reduced penalty within the next few months. To receive a complete relief from failure to file penalties, taxpayers need to have their returns for those years filed by September 30th. The nearly 1.6 million taxpayers who have already paid the failure to file penalty for that year received more than $1.2 billion in refunds or credits. Unfortunately, the penalty relief only applies to the failure to file penalty for 2019 and 2020 tax years. The IRS has said taxpayers who have unpaid taxes from those years will still be assessed the failure to pay penalty and interest, even if the taxpayer is eligible for relief from the failure to file penalty. The note here is file your taxes on time, no matter what. However, taxpayers who have not filed for 2019 and 2020 and owe taxes should still make an effort to file, because the failure to pay penalty is usually assessed at a 0.5% per month from the date the return was originally due. This can add up. The interest rates the IRS charges on unpaid taxes just rose on October 1st from 5% to 6%. So get on top of your taxes now. Next, we've got IRS crackdown on crypto continues, people. This summer's crash in cryptocurrency prices has many Americans soaring on digital assets as an investment. But the IRS continues to expand its efforts to locate taxpayers who are using cryptocurrency to avoid taxation. The COVID-19 pandemic slowed down the agency's virtual currency compliance campaign, but the IRS is once again ramping up its efforts. In September, the agency received a judge's permission to issue a summons requiring that a bank turn over information on customers using the popular crypto broker SFOX. It has also warned taxpayers that it may take additional actions to get banking information from taxpayers using other brokers. Additionally, the IRS is planning to spend a portion of the funding the agency received through the Inflation Reduction Act to improve its ability to monitor cryptocurrency transactions. The IRS treats cryptocurrencies such as Bitcoin and Ethereum as property, and taxpayers are required to pay the capital gains tax on any portion they earn by buying and selling virtual currency. For the 2022 tax year, the draft of Form 1040 U.S. Individual Tax Return includes an updated question on whether a taxpayer has engaged in any cryptocurrency. If you sold or are planning to sell any cryptocurrency during 2022, it is better to disclose your profits to the IRS and pay the tax due than it is to get caught not disclosing the asset to the government and face penalties and interest. Well, everyone, that's it for the Inflation Reduction Act and what I'm here to share with you today. So if you enjoyed this video, please like and share, and we will see you next time.